Today I'm joined by Carl Wakeford, a chartered accountant and the founder of FinOps Partners, a consultancy specialising in financial operations for purpose-driven organisations. So Carl, with financial risks becoming more complex, what emerging financial risks do charities in the UK need to be aware of?
Yeah, so thank you for having me. The charity sector is certainly facing a totally new landscape of financial risks. One of the most significant emerging risks is the threat of cyber attacks and data breaches. With more charities moving their operations online and relying on digital platforms to manage finances and data, cybersecurity has become essential. A data breach can result in heavy fines, reputational damage, and loss of donor trust. Serious consequences that could severely impact the charity's ability to operate.
That's really interesting. Cybersecurity has been a growing concern across all sectors. How can charities mitigate the risks associated with cyber threats?
The first step is awareness. Cybersecurity isn't always top priority in the charity sector, but it absolutely should be. Charities should invest in basic cybersecurity measures like firewalls, data encryption, and secure cloud storage. Regular staff training is also essential, especially as phishing attacks are increasingly sophisticated nowadays and often target organizations that are seen as more vulnerable. So charities should consider working with cybersecurity experts to assess vulnerabilities and really develop incident response plans so they're prepared if an attack does unfortunately occur.
That's really sound advice. So are there other emerging risks that charities need to be aware of?
Another pressing risk is the potential loss of funding due to economic volatility. Charities are already seeing the effects of inflation and interest rate changes on their budgets. Many rely on government grants or donations, and when economic uncertainty hits, these sources can quickly dry up. The cost of delivering services has risen across the board, and many charities find themselves struggling to cover even basic operational costs.
So how can charities build resilience against economic fluctuations like inflation?
Yeah, it's a really important question. So charities can start by diversifying their income streams to reduce dependence on any one single source. This might include exploring corporate partnerships, introducing earned income models, or even expanding into online fundraising channels. Building a reserve fund is also key. It acts as a financial buffer that can sustain the organisation during leaner periods. Also, adopting agile budgeting practices where budgets are reviewed and adjusted quarterly at the minimum can help charities remain responsive to economic changes. So by keeping a close eye on cash flow and proactively managing expenses, charities will be much better able to navigate financial uncertainty.
Those are some really great points. So I've also heard about the risks of compliance and regulatory challenges. Can you tell us more about that?
Yeah, so compliance is an increasingly complex issue for charities, especially those that operate across multiple regions or countries. Regulations around data protection, anti-money laundering, and donor reporting are getting so much stricter. For instance, the UK's General Data Protection Regulation, GDPR as we all often know it, has set new standards for data handling, which many charities will struggle to fully comply with. Also, there are ongoing discussions about tightening financial oversight of the charity sector, particularly around how funds are used and reported on.
So what can charities do to stay on top of these regulatory challenges?
Yeah, so first and foremost, charities should establish a strong compliance framework. This means assigning responsibility for compliance to a specific team member, or in larger organisations, even a dedicated compliance officer. Regular training sessions are invaluable, keeping staff updated on changes in legislation that impact their work. It's also wise to conduct periodic audits, either in-house or through third parties, to ensure that policies and processes align with regulatory requirements. It's about staying proactive, because doing so in these areas can save charities from financial penalties and reputational damage.
Okay, that's a really practical approach. So are there any risks related to financial transparency and accountability that charities should consider?
Absolutely. So financial transparency is a bit of a double-edged sword. While it builds trust, it also brings challenges. Increased scrutiny from donors and regulators means charities need to provide detailed and accurate reporting on how funds are used. The risk here is that without rigorous financial oversight, a charity might fail to meet these expectations, which can lead to reputational damage and loss of funding. There's also the risk of fraud, which sadly is a growing issue in the sector and one that unfortunately I have seen many times in my career. Without strong internal controls, charities are vulnerable to financial misconduct, especially when they're stretched thin on resources.
So how can charities safeguard against fraud and enhance financial accountability?
Internal controls are essential. Charities should have robust processes in place for for authorising and documenting expenditure, conducting regular financial reconciliations, and implementing a control called segregation of duties, which ensures that no one person has control over all parts of a financial transaction or process. I also recommend that charities establish an audit committee, even a small one, to periodically review financial practices and conduct spot checks. Finally, clear whistleblowing policies can encourage staff to report any suspicious activity without fear of retribution, creating a safer, more accountable organisation.
So you've covered a lot of ground here today. So are there any other emerging risks you'd like to highlight?
One final risk I'll mention is related to reputational damage, which can arise from many of these financial issues we've discussed: fraud, non-compliance, or data breaches. In today's digital world, news travels really fast. A single negative incident, especially if it's a finance-related one, can quickly undermine years of hard-earned trust. For charities, reputation is literally everything. Without trust, donations dry up and volunteers may hesitate to support the organisation.
Yeah, that's a very real concern. So what can charities do to protect their reputations?
Yes, so proactive risk management is the best defence. This includes not only financial controls and cybersecurity, but also having a crisis management plan. Charities should be prepared to respond swiftly and transparently if something goes wrong. This means communicating openly with stakeholders, taking responsibility, and demonstrating corrective action quickly if possible. So having clear, consistent messaging and a dedicated PR strategy can help contain damage in a crisis and reassure donors that the organisation is committed to rectifying the issue.
Thank you, Carl. This has been incredibly enlightening. So any final advice for charities as they navigate these emerging financial risks?
My pleasure. So the best advice I can give is for charities to approach financial risk as an opportunity to build resilience. It's like wearing a seatbelt in a car. You wear it to make sure that you're safe, but you hope you never need it. With proactive planning and strong internal controls, risk can become manageable, allowing charities to focus on their mission. And that's what it's all about. In today's environment, resilience isn't just about surviving challenges, it is about thriving despite them. So I encourage charities to view risk management as an integral part of their strategy to drive impact sustainably.
Thank you, Carl, for your insights today. It's clear that charities can protect themselves against risks and continue to make a positive impact.